Very good evening, sir.
Good evening.
So, shall we start or we should wait for 2 more minutes?
I think let us start it.
Today, we'll be discussing on the doctrine of mutualities. So, for the starters, if you could explain it in a very simple term as to what the so if you could explain us in a very simple term as to what does doctrine of mutuality actually mean, sir? Sir, you are muted. Your mic is muted, sir.
The doctrine of mutuality is a concept of general law. It is not a concept which you would find in either Income Tax Act or Sale Tax Act or Service Tax Act or now GST Act. Time and again, the various statutes and even the constitutional amendment, 46th constitutional amendment, has tried to tax by avoiding this concept of mutuality. But time and again, the Supreme Court has reiterated that if there is a concept of mutuality, then there can be no taxation. Now, what is concept of mutuality? Concept of mutuality is then when some people come together for a common cause and contribute, whether equally or unequally, to the kitty of that association which they form. It may be in form of an incorporated club. It may be in form of a private limited company or a limited company. It may be in form of a cooperative society. So it may take any form. It may be unincorporated also. But whatever may be the form, if few people have come together and there is a common cause for which they are contributing, and the fund which they are collecting is going to be utilized only for their benefit, for the benefit of those who are contributing to that cause, then the concept of mutuality says that one cannot earn income from oneself, one cannot sell goods to oneself, one cannot provide service to oneself, one cannot supply goods or services to oneself. So that is the essential concept, that one cannot transact with oneself. There has to be essentially two parties or two entities for there to be a transaction.
Sir, if I'm to give an example uh, from a real life perspective, what will be the best suitable example to explain this doctrine, sir?
So the best suitable example can be a, say, something which we see on a daily basis is a corporate, residential association of any society. Even a individual building has a association to take care of the common expenses which is required to maintain the building or the, say, the common facilities. So that is the, I think, the easiest example to give. Other than that, there are clubs wherein you see the entry and the facility which are there in a club can only be enjoyed by the club members. Then there are cooperative societies where it is run only for the benefit of the members of the cooperative society. They don't transact with the the rest of the world. So, or say any medical association or a trade association. So these are the kind of, common example which we can have.
So now, what are the essential conditions which is required for this doctrine to be invoked or for claiming mutuality?
See, the courts have held that there are essentially three conditions. One is that the identity of the contributor to the fund and the recipient of the fund should be the same. So the identity of the contributor and the recipient of the fund, that don't mean that they are the same person. Means say 100 people have come together, they form a private limited company. The private limited company is a separate legal entity. But it is essentially the contributors and the recipient, the beneficiaries of the fund which is collected remains the same. So that is one. Then the treatment of the company, though incorporated, acts as a mere entity for the convenience of the member. In other words, as an instrument to obey the mandate of their members. So it exists only for the benefit of the members. And the impossibility that the contributor should derive profit from the contribution made by themselves. So they cannot make any profit out of it. If suppose the society is dissolved, the club is dissolved, then as per the association, it will be utilized as directed in the association, but it cannot be a means to make profit. So that is the essence.
So is this doctrine limited to only in the direct tax framework, or is it also applicable in the indirect tax framework as well? Because as per your example you have given, going by that logic, a club or an association mutuality will invoke. So it takes care of the direct tax aspect of it. That yes, doctrine of mutuality does exist in the direct tax regime. Now coming to the indirect tax regime, sir, does this concept?
Yes, very much. I mean, in the direct tax, we have a judgment of Bangalore Club versus Commissioner of Income Tax, which was reported in 2013, Volume 5, Supreme Court Cases, page 509, when it was held that the doctrine of mutualities applies to the income earned by the club, as one cannot make a profit from oneself, and any amount received from oneself is not regarded as a income, therefore is not subject to tax. But at the same time, there is a catch in the case of income tax law. Okay, your question was different, that whether it applies to the indirect tax also. So it does apply to the indirect tax also. Because you see, whether in the context of sale tax laws or whether in the context of service tax laws, the Supreme Court has held that this doctrine is applicable. In fact, a amendment was made, 46th amendment in the Constitution, through which the attempt was made that any services provided by unincorporated club or association to its member will be taxed. There was a presumption in the statement on objects and reasons in the article through 366 within bracket 29 capital A was inserted, and it was presumed that the services by incorporated club sale the sale of goods by incorporated club to its member is taxable. But Honorable Supreme Court in the case of State of West Bengal versus Calcutta Club Limited, it was held that the 46th Amendment has not done away with the basic understanding. It does not say that even if you are providing service, selling goods to yourself, you will be deemed to be a separate person. So that is never stated in the constitutional amendment. So the basis of judgment prior to this constitutional amendment has not been removed, since that basis has not been removed. So the concept of doctrine of mutuality remains until and unless there is a constitutional amendment which says that even if the service is provided, there is a complete identity between the members and the club, they will be treated as a separate person, and it will be deemed to be a sale of goods or sale of services to a separate person. That is not there. So in case of sale of goods also, if there is a complete identity, then since one cannot sell goods to oneself, this is there. Then there is a judgment, very recent judgment of the Kerala High Court in the case of Indian Medical Association versus Union of India, wherein you see section 217 clause E and section 71AA was inserted by Finance Act 2021 with retrospective effect from 1/7/2017, wherein a deeming fiction was introduced that making supply of services by a club or association to its member is a taxable supply for the purpose of levy of GST. But it was declared as unconstitutional and void, being ultra-virus to the provision of Article 246 capital A and Article 265, because it was held that Article 246 capital A does not say that self-service or self-supply is covered within 246A. All that it says is that supply of service, and it contemplates that it will be from one person to the another. So there has to be existence of two person for the levy of GST, because even in the GST, the underlying presumption is that there will be two persons. So it has not done away with the existing judgments on the doctrine of mutuality, and it stays.
We were speaking about the judgment delivered by the Supreme Court in Bangalore Club. If you could, so please enlighten us as to what was that judgment about?
You see, that judgment was mainly about the liability to pay tax. The doctrine of mutuality was well accepted, but in this particular case, the club was earning income from interest on fixed deposit. Now, whether this was also covered within the doctrine of mutuality or not, this is what was examined. And of course, the Honorable Supreme Court elaborately dealt with the concept of mutuality also. But the Honorable Supreme Court, after considering the doctrine of mutuality, held that since there has to be the identity of the contributor and the recipient should be the same, that concept is ruptured here, because once the money is kept with the bank, then the bank is an outsider to the club, and therefore the identity does not remain the same. And it was held by the Honorable Supreme Court in Bangalore Club versus CIT that if any income is earned from the outsider, like in this particular case, interest from the bank, then that will be taxable.
Then how is this distinction done, sir? Whether it's a contribution from the members, or is it an income from a third party source, like uh, bank FD, which you just spoke about, sir? How is
So the distinction will be, for example, in this particular case, suppose the club lends the money to its member only and earns interest from that, then that identity remains, because the club is receiving contribution or say monthly subscription or something like that from its member, and then if it is any surplus money left, then it lends the money to its own members, who in turn pays some interest also. So in that particular case, the doctrine of mutuality remains protected, because the rotation of the money is not with the outside world. But once the moment that we step away from that circle, then the doctrine of mutuality breaks.
Sir, but does this doctrine strike a balance between the constitutional limitation as well as the need of the government view, sir?
Yes, of course. I mean, the constitution, I mean, again, in the Kerala High Court judgment and the Supreme Court time has again and said that the constitution does not envisage a situation where is one would earn income from oneself, one would provide service to oneself, or one would sell goods to oneself. That the concept of duality is there for the levy of the tax. For the levy of the tax in the constitutional framework, that duality of person is required because one cannot transact with oneself. So, I mean, the interest of the revenue is well taken care of. I mean, tomorrow I mean, if the revenue stretches this the desire to earn revenue any further, and tomorrow they say that if one is providing, say, for household maintenance, one gives money to one's spouse, and the government deems that no, since there is a duality of the person, so there will be taxability. But of course, there is the exchange of money between the spouse is for the maintenance of the family. So just like that, if suppose there is a family of people who have come together for a common cause, then it cannot be said that there is a income from oneself or sale of goods or provision of service to oneself.
So now coming to a very practical example. So say there is a club and so it provides services like hall rentals. So in such a scenario, will this doctrine shield those clubs?
So suppose if the club is giving rent only to its member, then that shield will be there. But if it is letting it, or the letting out of the, for example, say the letting out is only to the members. Members invite their guest. So in that case, the doctrine of mutuality remains because it is the guest of the member who is coming into the club's premises, and that mutuality remains because the letting out is not happening to an outsider. But if the court starts letting out to the outsider also, then that doctrine of mutuality will break.
Sir, and if, sir, with respect to sponsorship, sir, what about if the club is providing, so, let's say earning from sponsorship, sir.
Sponsorship also is outside the mutuality because you are interacting with the outside world, outside the periphery of your members. So that will be taxable in my view.
So then, how, in your view, how should the clubs or the association should maintain, sir, if to prevent future litigation?
The club should ensure that if there is any income from outside the the membership, if there is any earning from any entity which is not their member, then they should discharge their liability of the indirect tax as well as the direct tax. But as far as the interaction or the transaction amongst the members is concerned, that should be outside the purview of the taxation.
Thank you, sir.
Thank you. Thank you very much.
So there are no more questions from the panel today.
Okay, so we close the session.
Yes.
Thank you.